Hi everybody, I have instructions for you now on the currency trading assignment. I'm going to walk you through it and send an email to you also with a brief summary of these instructions. What we're going to do is use a website called oanda.com. I assume I'm pronouncing that correctly. So if you go and open a web browser, just type in oanda.com, oanda.com, oanda.com. That will take you to the Oanda website. Of course, here you want to click on Try a Free Demo. We're not going to be opening a live account. Well, it'll be a live account with real data, but not real money. So we want a demo account, and we are looking for the FX Trade Practice demo account with virtual funds. So click on that. Now they want you to provide some information for the registration. You do have to provide this information. You could make up a phony name if you feel more comfortable with that, but you do have to use your real email address because they send a confirmation email which contains the link for you to be able to access your account and password information, things like that. So you do have to use a real email address that you can access. If you're really uncomfortable, if you're a privacy person and you don't want them to know who you are, you could open up another email account just for this purpose. But however you want to do it, you will need an active email account. So type in your information there, including your email. They do want a telephone number also, but again, here this could be a fake number. It doesn't really matter at this point. You do have to select a username for yourself. For the account currency, select the US dollar. For your location, that is of course the United States, and then create your own password and confirm that password for your account. When you click register, what will happen is that they will then send you an email, and in my case it happened almost instantaneously within a minute or so. I received an email. So you go to your email account and this is what it looks like. The email says that your username is such and such, and please activate your account by clicking the following link. So as you do that, it will take you to a new page where it has the email validation with your username and password that you already entered, and you merely click submit and it should let you into your account. Well, actually it lets you access the quick start guide, which you're free to read through if you would like. Also this material on Learn Forex, which is some more informational material, but what you really want to do is sign in to the FX Trade Practice. So click on that to sign into your account. Alright, it'll take you to your account screen here, and since I already started this, some things are a little different here, but you want to make sure that for your funds that you have $100,000 for your funds. So if you don't have $100,000, then click on Add or Remove Funds and make sure that you have $100,000. Now, I had some open trades that I set up a few days ago before the weekend, and I left them open over the weekend, so I'm now seeing that I've lost significant amounts of money. I don't recommend that you do that, by the way. Don't leave open positions out there without monitoring them. So that's a big mistake. I've lost $23,000 by just letting that ride. Don't add money to your account, though. If this happens to you in the real trading, do not add money to your account. You should start with a beginning balance of $100,000 and do not touch the balance after that. So just make sure that you have $100,000 to begin with. After that, whatever happens, happens. Alright, well, in my case then, I'm already signed up. I had the $100,000 in my account initially, and I'm ready to go. So, it's not completely clear to me how I get into the trading. But, oh, yes, one more very important point. As you click on your account, as I just did, so you go back under Primary, click on your primary account. You should have only one account, but click on Primary, and it'll take you to this screen that I was just at. Notice that you already selected the account currency as US dollar, and then account leverage is something you can select. I would like everyone to select a 50-to-1 leverage ratio. That's the maximum leverage ratio. So make sure you select 50-to-1, as well as having the $100,000 to begin with. Okay, and then you can submit that, and then your account is set up. Okay. Alright, I think you go up here and click on My Account, hopefully, to get into the actual trading. Well, that takes me back to that. Okay, yeah, here's the button. Launch FX Trade Practice. We also have a link for Launch FX Trade News. That's a useful link to get caught up on what's going on in currency markets at the moment. But select FX Trade Practice and Launch FX Trade Practice, and that will take you into the trading interface. We'll wait just a moment while that loads. Notice it gives you the message, closing this window will terminate your session, so you want to keep this window open for the length of your trading session. If you ever close that window, then you're automatically logged out, but it doesn't close your positions. Keep that in mind. Okay, I do want to run this application, and here is my trading screen. I want to maximize the size of that, and it's loading. Maximize again. Okay, it's still loading some information there. Okay, so this is our trading interface, and you can tell that we have some currency pairs over here on the left. And I'm new to this interface, so you'll have to play around with it a little bit. I'm not sure if you can add more pairs than this or not. It's certainly a sufficient number of pairs. We have the euro against the dollar, we have the pound against the dollar, we have the Australian dollar against the US dollar, we have the US dollar against the Japanese yen, the euro against the yen, the pound against the yen, the Australian dollar against the yen, the US dollar against the Canadian dollar, the US dollar against the Swiss franc, and the New Zealand dollar against the US dollar. So those are the defaults. There may be a way to change those and add some more currency pairs. If you want to play around with that, go for it. I'm not going to take the time right now to figure out how to do that. That's your responsibility. For the sake of this exercise, there's no need to do that, so you can just keep these pairs if you like. Alright, a couple quick pieces of information on this. If you look at the euro-US dollar pair, for example, this is my favorite pair to trade. There are a couple different approaches here too. You can trade in multiple pairs, or you can try to focus on just a single pair. I tend to like to focus on a single pair. So anyway, the euro-US dollar, it has two prices. It has a sell price and a buy price. So if I would like to buy that pair, then I can do so at this price. And this is denominated in the second currency. So it's denominated in dollars per euro. So 1 euro, at this moment, if I wanted to buy 1 euro, it would cost me $1.11955. So these numbers, the numbers to the top left here are $1.11, but currencies are denominated in multiple hundreds, thousands, and tens of thousands of units. So the actual price to buy is quoted in $1.11 and 95.5 of a cent. Now this becomes important because we're buying and selling potentially in large chunks, like $1 million or more is possible. Actually, with my $100,000 and a 50-to-1 trading ratio, I can trade up to $5 million at a time. Now, actually, I don't recommend that you go all the way up to that limit of 5 million. You probably want to leave yourself some cushion. Probably don't go too much more than a $4 million trade at any given time, or $4 million in outstanding positions, because you do need to cover that margin somewhat. If you get up to the edge of that margin and your positions start going badly, they will be closed out automatically and you will lose money on those. You won't be able to wait until they turn around. That's actually happened to me. As I mentioned, I left a position open over the weekend. I can see it's no longer open. I had 2 positions open. I must have lost a lot of money on one position. Another position is still open, but it's at a loss right now. I'm losing $240. I can see that up here, my profit or loss on this particular position. It's a euro-dollar position, as we can see here in this column. It's 1,000,000 units of euro-dollar, and I'm down $240 right now. I purchased it at $1.1193. So actually, when I say purchased it, I have to qualify that slightly, because you can be either short or long on a position. If you are short, it means that you sold it to begin with. If you are long, it means you bought it to begin with. So I sold euro-dollar at 111.93. That means I need to buy it back at a price lower than that to make a profit. It's now trading at 111.943 to buy it back, which is higher than my 93.1. Therefore, I'm losing money. It's now down to $120 because it just went in my direction a little bit. I can see from this graph the prices that it's been trading at over the last, in this case, these are usually in Greenwich Mean Time. Although, yeah, let's see, this looks like Eastern Time for me, because it corresponds about to the time on my screen. So, so over the last, February 27th, so this is going back, this is denominated in every 15 minutes. So it goes back over a couple of days, all the way back to February 26th. Today is March 2nd, but we had a weekend in there. So this shows several days of trading, and you can see what's happened to the euro-dollar in that time period. This shows the currency pair we're looking at. It was trading up here. The value of the euro-dollar fell. That means the euro got weaker versus the dollar. Euro is cheaper. And then it came back up a little bit. Now it's fallen some. Then it came back up. Now it's fallen again. Now it's come back up a little bit. I sold back when it was at 111.93.1. That's at 93.1, about right here. So somewhere in this range is where I sold. So it came down, which is what I was anticipating. I made some money there. Now it's coming back up, so I'm now losing some money. Actually, it's now falling again. Even while I've been talking, I'm now down to just a -30 on that position. But since I sold it, it's a short position. I sold the euro-dollar pair. It's not really useful to think about these pairs as euros or dollars. It's better to think about it as a euro-dollar pair. You're either buying euro-dollar or you're selling euro-dollar. Euro-dollar is just a thing out there. If you really want to break it down, yes, it's denominated in number of dollars per 1 euro, but just think about it as a euro-dollar pair with a price that is reflected here. There's a buy price, there's a sell price. So I sold it at 93.1 to make a profit. I want to buy it back at a lower price. An alternative strategy is to buy it and then hope to sell it later at a higher price. Okay, so you either buy it at a lower price, sell it at a higher price to make a profit, or sell it at a higher price and buy it back at a lower price later to make a profit, long or short. Okay, so I'm just sitting on this position right now. I'm waiting to close that out. Again, it's a 1,000,000 unit position, and it just turned positive. It just turned to a profit, a positive $60. That's pretty good. I might want to close that out right now, even though I lost a ton of money on my other position, which you can't see now because it automatically got taken out. Oh, now it's down to -40. So I'm right at that edge where it's, oh wow, okay, it just moved to -150. You can see how quickly these movements can occur. To illustrate that, I'm in a 15-minute graph window here. I'm going to take it down to a 5-second graph window. This shows you what's happening second to second, so it's always updating. So a few seconds ago, 30 seconds ago or so, I was down at a good position. Remember, I want this to be low. Had I liquidated at that position, I would have had a $60 profit, but while I've been trying to talk and explain and everything, it's shot back up. It's now at 111.94.8. That's not good for me. I'm now at negative $310. Oh, it's shooting up even more, 195.4. Yeah, now it just fell again, so it's moving fairly rapidly up and down. Back up slightly. Let's see, back down, back up, back down. I want it to come back down again quickly. Now, there are a number of strategies I could take here. If I'm just going second to second on this, and I'm seeing something develop like this, I'm thinking that this is a temporary move up, and it's going to move back down. So I'm going to actually add to my position. I'm going to sell another 1,000,000 units of this. So I click sell, and I put in 1,000,000 units. That's 1,000 units. I want 1,000,000 units on the price. Now I could do some other things fancier here, but I'm not going to explain those right now because I just really want to get this trade in. So I click to submit, and it executed my order. So now I have two positions out there, and I have doubled up on my idea that the euro-dollar pair is going to weaken. In other words, the euro is going to weaken against the dollar. I want it to come right back down to this level, 111.91, and I'll make a nice profit if I can get down to that. Notice I bought at 93.1, well, I sold rather at 93.1, and I sold at 93.7, and I need it to go down so that the buy price is lower than 93.1 to be able to make a profit on both of those transactions. And once it gets lower than 93.7, I'll make a profit on the second transaction. Once it gets lower than 93.1, I'll make a profit on the first transaction. So I'm just going to bide my time here as I wait for that to happen, hopefully. Now, I might give up on that if I see movement going in the other direction. While we're waiting on that, let me go back to a transaction. Let's say I wanted to add another 1,000,000 to that position, for example. If I click on the sell again, we get the market order coming up, or that's the market order, or we can do a limit order. Market order goes through right away with no stipulations. A limit order is for an order that I'm not going to put in. I put the order in right away, but it has certain parameters around it that when it meets these conditions, oh, and look at that big drop. That's good for me. All right, when it meets these conditions, then the order goes through. And on the market order, I can take these other conditions, a lower bound, an upper bound. I can take a profit at a certain point or a stop loss, meaning it will automatically sell when it gets to that level, even though I'm at a loss, but I just want to protect myself from going way over. Or I can do a trailing stop where I'm looking at the gap between the profit and the current position. That will let me ride a trend for longer if I would like, but you can get information on all of these in their help windows and things. So if you click help, it will explain these more carefully. I'm not going to take the time to do that right now, but you can research that on your own quite easily. I'm now very interested in what's happening because you can tell my second position is turned positive. My first position is just barely negative, so I should be getting ready to close this position out. So I'm going to hit the buy button. I have 2,000,000 in outstanding positions, so I'm going to do 2,000,000. And now I'm just going to be poised here. I'm not going to submit this right now. I could put in, some of these stipulations or a limit order so that it would take effect at a certain point. But right now I'm going to do this manually by just sitting and watching and hoping that it takes another dip down here in just a minute. Ooh, with the wrong direction. It's now gaining some momentum back up slightly. I'm waiting for another drop to turn my position positive here. And who knows, that it might not ever happen. I had a window there. Oh, there's a big drop, and it's a positive, so I'm going to submit it. Okay, hopefully I got it in on time, and I'm out. Okay, it came back up, but I think I got it in on time. Now I can see what happened if I click on the activity screen. this shows all of my transactions. And my last transaction, it's in reverse chronological order. Oh, these are interest payments. I don't want that. Where's my $2 million order? I don't have a position open right now. Let's see. Again, I'm new to this particular interface, so I'm going to do something different here, and I'm going to look at my account, and I'm going to select full transaction history. This should open up a new window, and it's not immediately visible here, so I have to minimize this window, but rest assured it is open underneath this. It doesn't like me doing that. I'm just going to move it out of the way. So there's a little bit of clunkiness to this interface right now. Here is my transaction history. Oh, I see. It put those two transactions together as $1 million each to close out my two positions. I keep looking for the 2 million trade, but it was $1 million each at 111.92.6. Now 92.6 was good. Remember, I wanted it below 93.7. And I had this other one. It's back here at 93.1. So 92.6 was indeed below those two, and so I made a profit on that trade. Where I didn't do well was in this other trade that you can see on the list here. I did a dollar-yen trade, and I bought $1 million in dollar-yen at 119.59.8, and it automatically liquidated that position for me at 119.59.3. And I lost a lot of money on it. In fact, I lost... wait, no, that wasn't a big loss. Where's my big loss? That wasn't too bad. I only lost $41 on that. And I made 160 on that last trade cumulatively. So I'm wondering where I lost my big money. It's possible that I'm not looking at quite the right thing here. So it's a little different now because I did things in stages, and it should all work out, but as you can see, it's making me look bad. Alright, well, I think I'm going to edit this part out of the video. Alright, there's my trading screen. It's the applet. Okay, so I did that transaction. I actually made a little bit of a profit, $160 or so. And I don't know, I guess what I'm confused on is that I saw that number 77,000 somewhere on my account, but really this is my account summary here. These are the up-to-date amounts. I have a balance of $100,131, so I didn't lose that 27,000 that I thought I did. I guess I was looking at something different there. This is what's really important, and your reports will be based on that information. If I go back to my account, I guess account details might have something for me. Pulls this screen up. Okay, I don't know what that 77,000 was that showed up earlier, but I'm back to 100,131. So I would just disregard that for now. Everything looks fine. Don't lose your confidence in this interface. Like I said, it's new for me. Looks like it's working perfectly fine. It's not the world's cleanest and neatest and most fancy interface, but it seems to be working, and you'll get the hang of currency transactions by using it. So good luck. You can trade on the basis of either technical analysis, which is just looking at the graphs and making your decisions based on very short-term or perhaps longer-term movements in currencies. I can do the 5-second movements, or I can go as far as 1-day movements. This is over the much longer term, going way back for a couple of years, actually, over a year, to January and February of 2014. You can see what's happened over the last year. The euro has strengthened a bit and then has been on a long and steady decline, where it's come up and then back down a fair amount, but it's now down towards some of the lowest levels that it's been, down below $1.12, which is a really low level for the euro historically. I mean, going way back, there was a time when the euro was trading at below $1. I think the lowest it ever hit was about 87 or 89 cents, in that range. But that was going back well over a decade or more, actually, more than a decade, right at the beginning of the euro. So in years past, it's been up much higher, in the 130 to 150 even range. It was even higher than this in the years preceding. So it's been on a steady decline over the last year. You can form the basis of your analysis then on these longer term trades by looking at this clearly. If you're just looking at euro-dollar pair, and you could do this for any other currency pair, but you can see that the trend has been a decline, and so you would want to take that short position. You want to sell euro-dollar and wait for it to come lower than it is now and then buy it back. But you're running some risk there. In the short term, you can see that there have been significant gains back upward, which means there is money to be made by taking a long position as well. That means buying it initially and then selling it after it goes up. So because it is at this very low level, a person using technical analysis could very easily draw the conclusion that it would be better to take a long position rather than a short. You can actually make money either way, depending on what happens in the very short term. So that's technical analysis. I'll break it down. Here's the 1-minute intervals, so it gives you a little bit more sense of what's been happening over the last few hours. The other thing to do is to look at the news and information, and try to, on the basis of that news and information, get a sense of what direction the market is taking. Okay, so that would be an economic analysis, not a technical analysis. And you have these buttons over here, which are nice to be able to get some additional data and information, some news, this market pulse link, or economic analysis link. If you click on that, and remember this, you have to move your trading screen out of the way each time. It's not going to automatically close, so it is there behind what you're doing. Just kind of move it to the side here, and it opens a new window for you and it gives you access to all kinds of data and articles and things that might be of interest to you. Alright, that is about it for the currency trading exercise. Again, good luck with that, and I will sign off. Alright, I just want to clarify quickly the mistake earlier on my balance. Actually, what I was looking at on the $77,000 was the available amount I had to trade with. I already had an open position, and so that reduced the amount that I had available to trade with for future trades. It doesn't mean that the balance in my account is any lower. I still had almost $100,000 in my account. I just could only trade with an additional $77,000 at that time. So I didn't lose money over the weekend on a big transaction. I was smart enough to close that out before the weekend. As I went and looked back, I closed the euro-yen transaction out. I think it was a dollar-yen transaction, sorry, and lost a little bit of money on that one, but not much. So I'm now in the positive right now. I have a profit of $131 for my few trades that I've done.